The sell-off continues on Wall Street. The Dow falls over 190 points. The Nasdaq slides over 1% ahead of the July Consumer Price Index report. European markets rally after Italy waters down the bank windfall tax, and stocks in the Asia-Pacific open mixed, with the GIFT Nifty suggesting a gap-down start for the Indian market. Oil prices hit the highest level since January after steep drawdown in U.S. stockpiles and tighter global supply offset concerns over slow Chinese demand. Brent now is around the $87 per barrel mark. The Reserve Bank of India's monetary policy decision will be announced today, and a CNBC TV18 poll and Citizens MPC see no change in rates or stance, but the markets will watch for any hawkish phrases and for an upward revision in RBI's inflation forecast. And in important earnings to track, two-wheeler major Hero MotoCorp is expected to report revenue growth of 6.5%. From the broader market, results from Pidilite, Biocon, LIC, Mazgon Dock will be key to track. The Parliament passes the Digital Data Protection Bill amid protests from the opposition through a voice vote. Union government gets immunity from legal action and has the powers to exempt any entities from the provisions. IT Minister Ashwini Vaishnav tells CNBC TV18 the bill will be rolled out soon and the government will engage at length with the industry players. Editors Guild has claimed the bill will have a chilling effect on the freedom of the press. Good morning and welcome to Power Breakfast. Those are the top headlines that we're tracking for you this Thursday morning. There's lots going on. There's lots to track in terms of cues. So the global markets, we're waiting for the US CPI data. For our own markets, it's going to be all about what we really hear from the RBI, MPC today. And that is going to be really important to track, not just in terms of the decision, but also all of the commentary that does come through. Let's quickly, before we start with all of that, take a look at the global markets, because you have Asia, which is trading pretty mixed right now and largely lower, I'd have to say. You have the Hang Seng market, which is down 100 points, so that's lost around 0.5%. The Taiwanese market is the one which is perhaps looking the worst at the start today, so that's down a full 1.5%, definitely looking weak there. The Kospi is also seeing cuts of around 0.4%, and this trades, which by the way is opening after 1 day of a break, is now down around 0.2%. The only markets which are seeing some green and just some marginal green at that are the Nikkei and Shanghai markets, just around 0.2% higher on both of those. The GIFT Nifty will come up for you. It is indicating that the start for our markets will definitely be very weak. We almost have a 100-point lower start. That is what the open looks like for now. So that's what's happening in Asia. And let's see how things really move from here. But in the US market, we saw the sell-off on Wall Street really continuing. And the Dow Jones lost over 190 points. The S&P 500 was also down around 30 points at the close. And the Nasdaq was perhaps the worst performer of all three of these. It saw an over 1% slump. Now, in more action, if you look at the S&P 500 energy index, it closed with gains of over 1%. This after crude prices hit the highest levels that we've seen since January, and natural gas prices also hit a 5-month high. So that's important to track. And in some more news that we're getting from the US, this could be very important. We have Disney, which reported a mixed set of third quarter earnings. Subscriber losses continued, with majority of the losses coming in from Disney plus Hotstar. Meanwhile, investors will also, of course, like I mentioned, closely track the July Consumer Price Index number, which comes through. So that should be tonight. And that is the key cue to really track from here on as far as the global markets go. But with that, let's also bring you some important opinion. This comes in from Fed Vice Chairman Richard Clarida and Crossmark Global Investments' Bob Dahl. Listen in.
We're looking more at the core number. The headline number could actually pop up just because of the base year effect, but we got a good print on core in the last report, and we expect a similar print. We could be wrong, but a core number in the range of, say, 2.5% or so annualized, and that would certainly be better than we've been having. I think the Fed is truly data dependent now. I think that the chair, for example, in his press conference emphasized that they could pause in September, they could hike. I think they'll want to keep their options open. In particular, they don't want to declare mission accomplished too soon, but also they can't be tone deaf. I think they do need to acknowledge that the data is improving, especially on the price inflation side, less progress on the wage inflation side.
Well, we've had an incredible chase environment. I would argue, Carl, the kind of the 4,200 to 4,600 move on the S&P happened just in a few weeks, and caused me to scratch my head. Bob Pisani covered it well. Valuations, they're extended. You got to have things going really well to justify these kind of valuations. I'm still concerned about the lagged impact of what the Fed did over the last 15 months, the inverted yield curve, money growth, the leading economic indicators. So all this tells me some more sloppiness is probably in our future.
All right, that is some important opinion that we are tracking. But let's now talk about all of the cues that you should watch as we get into this very important trading session. We have Ekta, Nigel, as well as Surbi here to prep us up for this session. Guys, a very good morning to all of you. Ekta, let me come to you first. Yesterday was very interesting, right? We got that sudden energy boost in the last hour of trade. How's it looking this morning?
Thanks for that. Well, like you mentioned, the markets did stage a smart recovery in what was the last hour of trade. The Nifty managed to reclaim 19,600. Nifty gained around 61 odd points. We had the Nifty Bank which slipped and the mid-cap index which gained as well. So it was largely a mixed session, but a last hour recovery is what we saw. Now, in terms of the FIIs, they've bought after 9 consecutive sessions of selling, so that's definitely a positive. FIIs net bought around 644 odd crores, DIIs net sold close to around 600 odd crores. In terms of the US markets, that continues to be a concern because that did see a sharp correction in yesterday's trading session. So the global cues are a bit weak as of now. We do have the US CPI data for the month of July, which will be out today, along with the initial jobless claims as well. Asia is lower ahead of that inflation data. Crude has hit its highest level that we've seen since Jan of this year. And the gift Nifty is indicating that it's probably going to be a start in the red for us. Big cues today will be the RBI policy, so we will be waiting by for the commentary from the Reserve Bank of India as well. Weekly options, Nifty options expiry. And in terms of earnings, we have Hero Moto, Biocon, Alchem, Pidilite to watch out for. Well, the big cue overnight will definitely be the US CPI inflation data from the macro front. So that will be something that will be on our radar post-markets.
All right, Ekta, thanks a lot for laying out all of those cues for us. Today is clearly going to be a very important day with the RBI policy decision expected just hours from now. But Surbi is here to list out the entire list of stocks that we should watch for in today's trading session as well. And Surbi, some important results coming through.
That's right. So let's start with Tata Power first. Revenues are up 5% on a year-on-year basis. EBITDA was up nearly 75% and margins came in at 19.4%. Z Entertainment, the revenues were up 8%. Margins came in at nearly 8% versus 14.5%. Additionally, NCLT Mumbai is going to pronounce an order related to the Z-Sony merger case today. So that is expected. Max Financials, the total APE, that was up 10%. The VNB margins have expanded by 100 basis points. And also, Axis Bank board has approved infusion of 1,612 crores in Max Life through preferential allotment. IRCTC, the revenues were up 17%, EBITDA was up 7%, and margins came in at 34.2%. Bata, it was a weak set of results. Revenues were up 2%, margins came in at 25% versus close to 26%, and PAT was down 10%. PI Industries, it was a great set of results. Revenues were up 24%, EBITDA was up 35%, and margins came in at 24.5% versus 22% same time last year.
Okay, Surbi, thanks a lot for that entire list of stocks. We're going to watch for all of these. Finally, it's over to Nigel. Nigel, it looks like the start will definitely be weak, but take us through everything we should watch.
Well, it was a very good end to yesterday's trading session, but today we have two big events. One is the RBI policy meet and the CPI data as well. And I'll also be tracking the FI flows because they turned around yesterday after quite a few days. What do the FIs do in the F&O market? Well, they unbound some long positions, so they continue to remain net short, with close to around 55% of their positions on the short side. We had two strikes that were very, very active, the 19,500, 19,650 put. Well, they were fairly active in yesterday's trading session. But I'm looking at the highest open interest, and they come at 2 marks. One is the 19,500 put and the 19,800 call. Now, we are trading bang in the middle at around 19,650, which brings us to the levels. Well, we're reaching that 20 DMA, which is a crucial zone, and it's a crucial congestion zone. 19,650 to 19,700. The bears will like to defend this mark. But as we have seen numerous times in the last week or so, we go to around 19,450. And from there, we do see some bit of buying. Now, moving to the Nifty Bank, that's going to be the swing factor, right? We have the RBI policy meet today. So yesterday, we defended the 50 DMA. That's one level that you should be looking at on the downside. If that breaks, well, you hope that, there is some kind of support at around 44,300 odd, while resistance comes in at around that 45,200 odd. I think that plate has to be, interchanged out there. So let's see how it goes. For starters, though, we'll have the Nifty likely to open up a tinge in the red. Back to you.
Okay, Nigel, thanks a lot for bringing us all of those cues. With that, we do need to get into a short break now. But like I mentioned, all eyes are on the MPC's policy decision at 10 a.m. today. So we're going to bring you all of the expectations from our CNBC TV18 poll on the other side. Stay tuned for that. Welcome back to Power Breakfast. Now, the three-day meeting of the RBI Monetary Policy Committee ends today, and RBI Governor Shaktikanta Das is expected to announce the decision at 10 a.m. today. Now, a CNBC TV18 poll shows that 100% of market participants are expecting the RBI to hold rates this time around. Ritu is here at the big wall to take us through all of the highlights from the poll.
Well, this monetary policy comes amid a sharp spike in vegetable prices, but easing momentum in fuel and core inflation, steady high-frequency indicators, and a divergent global monetary policy cycle. So the question becomes, what does RBI do amid all of these mixed signals? Well, all of the respondents to CNBC TV18's poll expect the Reserve Bank's Monetary Policy Committee to prolong the pause and leave repo rates unchanged at 6.5%. In fact, the markets do not expect to see any more rate hikes in this entire financial year. The first rate cut is only expected in the April to June quarter of the next financial year, that is FY25, by 60% of our respondents, with some even expecting the cut to happen in the quarter before or after that. Now, in a status quo policy, markets are not really expecting much on the liquidity stance either. So the stance of the policy, which has remained at withdrawal of accommodation for over a year, is also now widely expected to be left unchanged in this policy. Food inflation is likely to drag the overall consumer inflation higher in July, perhaps even in August. So the CPI inflation forecast for the full year, which is currently at 5.1% on average, is expected to be raised, but only marginally, to 5.2 to 5.5%. The RBI is also expected to leave the growth forecast unchanged at 6.5% for the year. Now, put all of this together with the mixed signals on inflation amid global uncertainty, and the governor is likely to sound more hawkish than not.
All right, Ritu, thanks a lot for getting us all of the highlights from the CNBC TV18 poll. Just around 2 hours to go, and then we will have the decision. But let's move on now to some of very important news. India is moving closer to getting its first data protection law. The Parliament has passed the Digital Data Protection Bill through a voice vote, which will now be sent for President's approval. And once passed, this bill will allow for no consent needed for the transfer of personal data. Other new clauses of the bill also include the government being able to direct the blocking of entities collecting data if recommended and furnishing information when they seek it. In fact, my colleague Ashmit Kumar spoke to IT Minister Ashwini Vaishnav. Here's a slice of that chat.
Give us a sense of what the industry feedback has been and what it may look like going forward in terms of a possible timeline that you may be looking at, or possible engagement with the industry as this bill now act slowly will be rolled out.
Industry, citizens organizations, experts, legal experts, global experts, they have all praised this draft. They have praised the formulation of this bill, they have praised the language of the bill. They have seen that the bill is principles based. This is not a prescriptive law, right? They have praised the very limited number of exemptions given to the state. They have praised the fact that very flexible implementation structure has been designed, which is digital by design. So I think going forward, we should be seeing the rollout very soon. We have already been working on the rulemaking and the digital implementation process. We have already been working on it, so it should be rolled out very soon.
Let me get a word in on the GDPR. Anytime there's a legislation that comes in among a large emerging economy like India, it often gets compared to the GDPR. In your conversations that you've been having with leadership figures across geographies, you were in Davos as well, give us a sense of how this bill stacks up against something like a GDPR, which for long has been seen as some kind of a benchmark in terms of the toughness that it seeks to adopt.
One good thing about our bill is it is not prescriptive. If it is prescriptive, then what happens is as law changes, as the technology changes, law will generally not be able to catch up with it first. Second, the compliance burden for the citizens as well as the industry will become very high. So we have kept it principles based.
So you spoke of exemptions, but when we speak of exemptions, one stark change that we see is that there is no blanket exemption for the government, but there are still some breakbacks that the government got on terms of this bill, saying that this exemption, given that the government collects vast volumes of data, so whether that's Aadhaar, whether that's CoWIN, is it time to clear the air that will they be equally accountable? Will Aadhaar, CoWIN be equally accountable under the current framework?
Absolutely. Government is absolutely equally accountable. The carve-outs, the exemptions are very specific. They are as per the constitutional mandate. There is nothing which basically differentiates the government data fiduciaries.
That is the conversation with the IT Minister Ashwini Vaishnav. But with that, we are going to get into a short break. On the other side, we're tracking all of the commodity action. There's been a big move in the energy prices. We'll tell you what's going on when we come back. Welcome back to Power Breakfast. Let's talk about all of the action that we've seen in the commodity space now. Manisha is here to fill us in. Manisha, we saw some big moves in the energy market. So take us through what really led to that.
Well, thank you for that, Pavitra. Yes, if you look at the crude oil prices, we are trading at November 2022 highs for WTI, and the Brent is trading at the highest level in 2023. Not just that, you have the gas prices trading at a one-year high. Natural gas is trading at a 7-month highs. So everything within the energy space is trading in the positive right now. That is because the U.S. inventory data tells us that there has been a decline in inventories for products, even as the crude inventories have seen a rise. The other thing is the production cuts from Russia and Saudi Arabia. The markets are looking at tighter supplies. So even as the Chinese imports have declined 18% on a month-on-month basis for the month of July, we have seen stronger demand for rest of Asia. The demand also seems to be picking up in US and Europe, and that clearly has been supportive. The markets will now watch out for the US inflation data that comes in today. In the meanwhile, ahead of that, you have seen a sharp decline continue for the metal as a sector. So it's a 1-month lows which we are trading in for gold and silver. Copper is trading at a month lows. Steel and iron ore are now trading at a 2-month lows as well. So while the energy markets are doing quite well, can't say the same about metals.
All right, Manisha, thanks a lot for getting us all of that action from the energy space as well as the metals pack. But with that, we have to wind down on this edition of Power Breakfast with the news that Asian markets are pretty mixed, largely lower there. And the GIFT Nifty indicates that the start for our own market is going to be well in the red. Thanks for tuning in. We have Bazaar Morning Call coming up after this short break.